In terms of the numbers, you can see that there is a huge inequality between the haves and the have-nots. The need to improve their financial situation, whether it's inherited from one generation to another, the result of an emergency, or some other reason, keeps many people up at night. Hello and welcome back to the Finance Guardian channel. Sadly, the poverty statistics also show a large proportion of people of color and suggest a difficult cycle to break. Financial institutions have also been guilty of long-standing discriminatory practices. Compared to the 50% of white individuals and only 23% of African Americans and 22% of Hispanics are financially healthy. In order to achieve the same level of wealth as white Americans at the current rates of income growth, the average African American family will need 228 years. It will take the average Hispanic family 84 years. The fate of people of color can look pretty bad when you look at the statistics that were reported by the CFSI. Despite the obstacles, more and more people are trying to break the cycle these days and opening up new paths. Regardless of who you are, building wealth and overcoming poverty can be challenging, but it is definitely possible. So here are some tips for you to know what it takes to break free from poverty. Hit that subscribe button and the bell beside it, and let's get started. Number 1. Educate yourself. We begin with this one since it's the most important. Simply put, being financially illiterate makes you more vulnerable to being taken advantage of, especially given that most schools do not currently offer financial literacy courses. Thus, education is essential. To begin with, be sure you understand the basics of financial literacy, how credit works, and how to responsibly build it. Knowing your options when it comes to financial products and institutions, and having knowledge about your rights when it comes to banking and finance. More specific examples could include when shopping for credit cards, make sure you know the APR or annual percentage rate, which is how much interest you'll pay if you miss a payment. If you're considering a loan, make sure you understand the amount of interest you'll have to pay and other repayment terms, including the length of the loan and your monthly payments. In addition to the total cost of the loan, lenders are required to provide you with a payment schedule. You should compare several financial products or companies before choosing one. This is similar to how you would compare shoes before buying them. This way, you are sure to get the best deal. For people who are already on a low income, it's particularly important to save where you can. Read authentic and credible blogs to increase your financial literacy. You can also visit websites like NerdWallet or Credit Karma. Alternatively, you might consider visiting the Center for Financial Services Innovation or CFSI. CFSI is one of the leading authorities on consumer financial health and on helping financial services provide better products and services to consumers. Visiting the Consumer Financial Protection Bureau, CFPB, is another way to ensure you know your rights. This company exists to ensure that banks, lenders, and other financial institutions treat customers fairly. Additionally, they provide programs for financial coaching, adult financial education, and other resources. Equip yourself with all the necessary knowledge you can acquire, because knowledge can be your best weapon. Number 2. Take a different approach to money. When it comes to improving your personal finances and achieving financial wellness, it's 20% skill and 80% behavior and mindset, says Bola Sokunbi from Clever Girl Finance. Low-income workers find that changing their mindset towards money is the most difficult part of breaking the cycle of poverty. They may have a deep ingrained attitude toward money influenced by their parents' money habits and lessons. If you want to begin changing your mindset about money, take a moment to assess where you come from and where you stand today in terms of your finances. Financial educator Sharita M. Humphrey offers another mindset shift if you are currently living in poverty. According to her, you aren't poor, you're just on a lower wealth scale. How do you explain that? Well, your financial situation becomes something you can change when you think of it as a temporary status. To put it another way, you have income mobility. You can move up the wealth chain if you make the right decisions and manage your finances intelligently. It can sometimes be very powerful just to hope that things will change for the better and that your situation will improve. Number 3. Utilize the community's resources. Even though changing your mindset is helpful, a positive mindset will only get you so far. Chances come into play at some point too. As comedian Trevor Noah points out in his book, Born a Crime, people love to say, give a man a fish and he'll eat for a day, teach a man a fish and he'll eat for a lifetime. What they don't say is, and it would be nice if you gave them a fishing rod. Taking the next step to mindset change involves finding the right tools and people you need to succeed. Here's where your local community's resources can play a critical role. Do you need financial advice or more active assistance? Struggling to figure out how to handle your taxes? Or would you like expert advice on other areas of finance as well? Make use of the local community resources available to you rather than struggling alone in silence. Consider these resources as another way to improve your financial literacy. Although reading online can be great, sometimes it is also nice and helpful to interact face-to-face. You might want to check out these following resources for free or low-cost help. Non-profit organizations like United Way, public libraries or schools, some churches and community centers, the IRS Tax Assistance Center specifically for taxes. Many of these organizations offer programs that can help you prepare taxes, gain a basic understanding of financial literacy, or find legitimate financial products that fit your needs. It's not uncommon for them to host financial speakers, conduct courses, and occasionally even give one-on-one coaching. You might also consider a certified financial educator, counselor, or advisor if you have more income to dedicate to bettering your financial situation. Number 4. Pay attention to your credit score. CFSI states that an individual's credit score and history play a significant role in his or her ability to achieve economic security and build wealth in the United States. But that opportunity is not always easily attainable for communities of color. It could cost you a lot of money to have bad credit over the course of your lifetime, no matter who you are. If you have bad credit, you may have higher interest rates, higher car insurance rates, and be unable to borrow money. Your credit score could impact you in more ways than just financially. Depending on the state, it can even affect your job eligibility. As a matter of fact, 72% of employers now perform background checks on employees before hiring them, and 29% conduct credit checks. A responsible credit building strategy is a good way to break the cycle of poverty. Depending on your situation, there are many ways you can establish or rebuild your credit. You should first understand how credit works, how your credit score is calculated, and how you should build your credit. You can get started by reading credible blogs like The Simple Guide to Building Credit and Saving Money, or you may want to talk to a financial advisor. Keep in mind that it's not a quick fix and it's not something that can be done in one sitting. It takes time and effort of a lifetime. It may be uncertain how long it will take you to establish or rebuild your credit score, but by taking the right steps and managing your credit well, you'll be able to access more financial products, better loans, and more purchasing power as time goes by, perhaps even breaking the cycle of lower wealth. Number 5. It's okay to walk away. Don't be afraid to walk away from a financial product or institution if you have a bad feeling about it. You should walk away from a bank that is trying to hide stuff or is not being honest and transparent with you. Also, avoid any bank that attempts to discriminate against you on any grounds. There are many financial institutions you can choose from, so be sure to find a company that will treat you fairly. Since your relationship with financial institutions benefits them, they should respect you at the very least. You work too hard for your money to be treated poorly, and at the end of the day, financial institutions profit from your savings, investments, and even your debt, so you should be treated respectfully, explains Bola from Clever Girl Finance. Asking people you can trust can also be useful in situations such as this. Look for places where they had positive experiences and go there. At the end of the day, remember that your money matters. Make sure you put it where you want to be supported and where they will support you in the future. Don't be intimidated by what you might be told or try to convince you to believe because you have more options than you think. So always conduct your own research to figure out what will work best for you. And that is all the time that we have today, folks. We hope you enjoyed this video, and if you did, please remember to hit that like button. And if you're new around here, welcome to our channel. Please do subscribe to us, and on your way out, remember to click on that bell icon too so you can remain updated about all of our future videos. You're welcome to the channel where you will learn the basics of personal finance in easy to understand language. We'll see you next time.